Hi crypto kings and queens, welcome to my channel. My name is Natalie. Today's video is going to be a little bit different. What I want to do is show you how market structure is working on the higher time frames. I'm not going to dive into the lower time frames because I want you to understand the higher perspective first and why it's really important. So I'm going to show you exactly what high highs and high lows is, what sideways market is, and why it's so important for us to use the higher low to buy the market. And I also will show you why the lower high is the part of the market that you want to sell the market, and in a sideways market you're selling from the resistance to the support and you're buying from the support to the resistance, etc. So if you don't understand how market structure is working and if you want to be a profitable trader, this is the first thing that you have to understand. So continue watching this video and I'll show you exactly how market structure is working on the higher time frames. So what I have noticed on my live streams is that a lot of people have no clue sometimes about market structure and they're having panic because the market is going down. And if you don't understand market structure and you're an investor or you want to become a trader, if you don't understand market movements, you will never ever be able to trade in the market and be in profit, because you have no clue what you're looking at. Market structure is one of the most basic things that you're looking at when we are inside the chart. It doesn't matter if it's Bitcoin, Ethereum, if you're looking at Forex pairs, if you're looking at stocks market, everything you're looking at is market structure. The market is going up, the market is going down, and the market is going sideways. And our job is to figure out what type of market are we in. And that is why it's always easier for us to use the higher time frames, because the higher time frames is showing us the direction. When you're just looking at the lower time frames, you will be confused because it's so many things happening on the lower time frames. But when you're zooming out and having the bigger perspective of what you're actually looking at, it's easier for you to look at the lower time frames, but understanding that this is a pullback on the uptrend. This is just a pullback on the downtrend. So what we're trying to do is obviously figuring out what is going on these markets. And you also have the market going sideways. Market goes up, market goes down. In between that, the market goes sideways. And in a sideways market, also called consolidation, what market is doing is that it's bouncing from support and to the resistance a couple of times. And if you don't understand that you are in a sideways market, it's super easy for you to get faked out. Most of the times when people are losing their money is because they don't understand that they are in a sideways market. And if you're buying the market from the low and you're having your take profit too high up, the market comes up to the resistance and then go back down to the support. Or if you're selling the market at the resistance and you're having your take profit too far away from the support, market comes back inside and then it goes up to the resistance again. When we are in a uptrend, we obviously want to buy the market. And what do we want to do? We want to buy the market at the higher low, higher low, higher low. In a downtrend, we want to sell the market at the lower high, lower high, lower high. And if you want to trade inside of a consolidation market, a sideways market, the best way to do it is sell from the top back down to support, buy from the support back to the top to the resistance, etc., until you actually see the market breaking one of the directions, breaking the resistance, turn it to support, market goes up. Market breaks the support, turn it into a new resistance, market goes back down. So this is the first thing that is very important before we're going into the market, is to recognize what type of market am I in right now. So I'm using Bitcoin's chart right now on the daily. I'm not going to go into the lower time frames because it's going to be too complicated. And this is for beginners, or if you don't understand market structures, and obviously that you are a beginner at that point. But looking at the daily, this is just so simple. Going back to what I was looking at on the weekly chart, you can obviously see that this is clear market structure. You have the high, you have the higher low. When you are going to the real chart, it's obviously not going to be that simple. And that is why we're using different tools to figure out where can the high and low be, because I want to buy the market, I want to sell the market. I have to use different tools to understand where can I potentially sell the market at the lower high. I'm not going to dive into that right now, but first of of all, we need to recognize what type of market we are in. And when we're looking at this overall picture right here, you can see clearly that the market is on its way up. And if you don't know that, we can just take a trend line and see that the market is going up, right? Market is above this trend line, as we can see. We're taking that one away and we are zooming into this high and high low market. And this is the thing. So market created a high, market came back down, created a what? A higher low. Creates a high because the market is higher than the previous high. Market comes back down, creates a higher low because it's higher than the previous higher low, etc, etc, etc. And this is the thing, guys, as you can see right here, we did create another high, but we never broke this previous high. So this could be a sideways market if we're going down to the lower time frames. But this is the thing. So market is never perfect, but that is why we always have to figure out what type of market we are in. And if you want to understand a uptrend, the market has to maintain the higher lows, the support trend line, as you can see right here. When we're breaking the higher low, that's when the market is breaking the trend. The market is breaking market structure, and then we are using the trend line to see, okay, we're still below the resistance trend line. So this is what happens. So market created a high. And remember when I said for us to be in a uptrend, the market needs to create higher lows. What happened? Market broke the previous higher low, came back down, created a lower low because what? The market is lower than the previous higher low. Market comes up, creates a lower high. And this is actually when the market is confirming that the market is not in a uptrend anymore. The market never had the power to break this higher high. It's lower than the previous high. And what happens then? Market creates a lower low because this low is lower than the previous lower low. Market creates a lower high because it's lower than the previous lower high. Goes back down, lower low, lower high, lower low. And what happened next? Market did break what? The market did break this last lower high, as you can see right here, and created a high. A higher low because it never broke the previous lower low. Higher low, higher low, higher. What happened? Market broke the previous higher low, created a lower low, a lower high because it never had the power to break the higher high. Creates a lower low, and then what happened? Market goes up, it comes back up and creates a, so right here we had a small high. It was just right here, but we didn't know, okay, is the market actually breaking to the upside or not? But we did create a higher low because the market never came back down and broke the lower low. Market creates a higher high because what? Market did break the previous lower high. High low, high, etc. So this is how the market is always moving. So that is why it's so important that we're using the higher time frame so we understand what the market is actually doing. And when we see the market on the higher time frame create a high, the next thing that happens when the market is starting to pull back, we understand that the market right now just might create a higher low. And what are we doing at the higher low? We're buying the market right here. Because if you are buying the market at the high, guess what's going to happen? You will lose your position. If you're buying the market right here, you're having your stop loss. I don't know where you have it, but if you're having your stop loss down here, you will lose your money or probably lose your whole account. So that is why we're trying to figure out that we want to buy the market as low as possible. As I told you, I'm not going to go through that right now because I want you to understand market structure. Market goes up, market goes down, market goes up, you have the market goes back down a little bit, market goes up. That's market structure. We need to figure out what type of market we are in. And that is why it's easier for us to use the higher time frames to see what direction we are in. Because if the higher time frames is showing us that we're actually on its way up, it's easier for us to go down to the lower time frames then and see what we can do when we see the market actually having the higher low created and now we start to break to the upside again. Same thing right here when the market is going back down. What happens right now on Bitcoin? Everyone is thinking that the market will go up, but looking at this, you have the lower high, you have the lower low, you have the lower high, you have a lower low, a lower high. Market right now did create a lower low. Market goes up a little bit. It just might come up to the previous lower high, create another lower high. Market goes back down again. So when everyone is buying the market when the market is going down, there's no wonder that you are in drawdown, because the market is obviously just going straight down. And this is the higher time frames. This is the daily chart that we're looking at. So that is why you need to understand the market goes up, market goes down. You don't have to panic. This is how market is moving. The market will not always go straight up. That will never happen. The market is always doing the high highs and high lows. The market is going in a sideways market. Your job is to recognize what type of market you are in. And when we're zooming in right here, because I also want to show you how it looks when you're having a sideways market. As you can see that the market is bouncing in between the resistance and the support level right here until the market actually has the power to break this level and starts to create high highs and higher lows. When we recognize this, and a lot of time you're having a lot of wicks to this level and you start to see the market trying to break it, but it comes back inside again. And that is why it's easier for us when we're recognizing the market is actually not doing anything. I mean, you're having the lower high, but you have a lower low, and market just, and this is just a choppy market. The market is just going sideways. The market is not having a clear direction until it actually breaks it. And it's the same thing here. You can definitely see the market did create high highs, and you see the movement, you see the pressure to the upside. But this is just, market is just going sideways, and then eventually the market decides to break to the upside. So this was just a short video because I recognize that a lot of people have trouble finding out what market structure is and how it's working. But if you only understand high high, higher low, lower low, and lower highs in a sideways market, that's going to improve so much in your way of trading, because that is one of the basic things that you need to understand for you to be able to be a profitable trader, to understand the trends that we are in. And obviously, if you like this video, please comment below, and the next time I will show you that, because this is the higher time frames, when we're breaking everything down to the lower time frames, you will actually have different trends inside the trend. So for example, on the daily, we can see the market is in an uptrend, but you're having on the 15 minutes, you're having different uptrends and downtrends and sideways markets inside that trend. So on the daily chart, you might be in a uptrend, but on the 4-hour chart, you just might be in a downtrend. So we're always trying to combine all of these things together. But the first thing that you need to understand is the overall picture. Are Bitcoin in a uptrend on the weekly chart, or is the market in a downtrend on the weekly chart? And after that, we are breaking everything down. So if you liked this video and understood what I was talking about, please comment below. And if you like this video and want me to do more videos like this, also tell me. And what else do you want to know about that? Don't forget to subscribe to this channel, because I go through cryptocurrencies every single day. I have multiple live streams during the week. Like this video, comment below, and have a good day. Mwah, from Sweden.